Hey, good morning everybody. Today is Wednesday, June 15th, 2016. My name is Cliff Backus and this is your pushbuttonstocktrading.com daily video market review. Let's get started this morning as we generally do with our spectrum analyzer. It's important that we identify where the leadership in the market is. To that end, we use HGSI, High Growth Stock Investors Spectrum Analyzer, to identify market leadership on a daily basis. Yesterday, of the top 100 most powerful stocks in the most powerful industry groups, 28, well over a quarter, came from the real estate investment trust industry. 9 came from utility networks, 8 from application software, 8 from integrated utilities, and rounding out the top 5, we had precious metal mining with 6 stocks in the 100 most powerful stocks in the most powerful industry groups. We've been seeing a lot of real estate investment trust, we've been seeing some application software, and we've been seeing a lot of precious metals mining recently. These may be good places to look for leadership in this market. Let's take a look at the Russell 2000. As you know, I think the Russell 2000 is the key to the market going forward here. On Tuesday, the Russell pulled back, tested support right here where you would expect it to, and held. That's the 1140 area. We would expect to hold there. Next minor area of resistance is going to be up here in the 1156 range. If we're to hold the 1140 area, the next significant area of resistance is way up here in the 1205 area. It's worth noting that yesterday, after several days in a row of closing at the bottom of its daily trading range, the Russell closed right in the middle of its daily trading range, actually toward the upper end of its daily trading range. The bulls will look at that as a positive sign. Let's see what the NASDAQ Composite's up to. But before we do that, stocks traded lower again yesterday, but well off their lows for the day, as both the S&P 500 and the NASDAQ held support at key moving averages. Trading volume was higher on the New York Stock Exchange, but fell on the NASDAQ. While volume was heavier on the New York Stock Exchange and the S&P was down for the session, the selling in the S&P did not meet the minimum 0.2% threshold for a distribution day. Distribution is defined as a trading session where either the NASDAQ or the S&P trade off at least 0.2% on heavier trading volume than the prior day. Distribution is an indication of selling by the professional money managers that move the market. Too much distribution in a short period of time can be an indication that an uptrend's in trouble. According to our count, both the NASDAQ and the S&P 500 currently have 3 distribution days each. Investors.com has the NASDAQ with 4 distribution days and the S&P 500 with 5. The older distribution becomes the less relevant. We stop counting distribution when it's a month old. Investors.com doesn't purge distribution from its count until it's 5 weeks old, and they count stalling days. A stalling day is a form of distribution that requires an index to close higher, but in the bottom of its daily trading range on heavier trading volume than the prior day. Unless it's egregious, we don't track stalling days. All that noted, Investors.com has lowered its market outlook to an uptrend under pressure. Our market timing model is clinging to a buy signal. A buy signal indicates that both aggressive and conservative traders can buy here, but we shouldn't be increasing margin at this point. Tuesday, declining issues topped advancers by less than 2 to 1. For the first time since May 19th, new lows bettered new highs. It should be noted that that was the day that the market put in its interim low. According to our Ramosi ratio, small capitalization stocks bettered large and continue to outperform on a 10-day moving average basis. The bulls prefer to see small caps outperform. The short-term McClellan oscillator Friday became the first of the indicators that we follow to turn bearish. That was followed on Monday by our new high, new low indicator and Wells Wilder's directional movement indicator, or the DMI. Our new high, new low indicator is typically one of the first indicators, if not the first, to show a change in market direction. but also is frequently early and prone to false signals. From a market perspective, both the S&P 500 and the NASDAQ appear to have paused at significant support. While the distribution count is less of a concern, we are beginning to see signs of short-term strain in the market. Our market timing model is now on a buy signal, but all of a sudden that's looking tentative. The market looks as if it needs to consolidate gains. Currently, the NASDAQ is testing support at its 200-day moving average, the S&P at its 50. We'll see if we can hold these key levels. In the meantime, traders should be as fully invested as they're going to get, and as always, should keep their stops in place and current. Okay, the NASDAQ yesterday was down 4.89 points, or 0.1%. We closed at 48.43, and notice how we closed above the midpoint in our daily trading range. For the past few days, we've closed at the very bottom of our trading range. Closing at the midpoint or above is a little bit of a bullish indication here, maybe indicating that this short-term sell-off has reached its nadir. Trading volume yesterday was below the prior day. For you followers of William O'Neill, we are in a uptrend under pressure. We've been in an uptrend since February. Right now we have 3 distribution days on the NASDAQ, which isn't a lot of distribution, and on the 17th we're going to lose this distribution day. On a very short-term basis, the NASDAQ is bracketed by support at its 200-day moving average, which we show here in black, and resistance at its 50-day moving average, which we show here in red. On a more realistic basis, we're bracketed by support down here in the 4678 area and resistance up here in the 4900 range. Currently, our market timing model is on a buy signal, which indicates that traders can be adding to portfolio positions at this point, but shouldn't be increasing margin. Let's take off the markups on this chart, and I want to talk about our buy signal. As we noted, we're currently on a buy signal on the NASDAQ composite, but we're very close at this point to a don't buy signal. But I want to review what it would take for the NASDAQ to go to a don't buy signal. In order to go to a don't buy signal on the NASDAQ, we're going to look for 4 things. First, the NASDAQ has to be trading above its 200-day moving average, which we are. We show the 200-day moving average here in black. Yesterday we closed above that level. Secondly, the 10-day simple moving average has to be lower than the day before. We show the 10-day moving average in green. You can see it's clearly lower than it was the day before. Third, the 21-day exponential moving average has to be lower than it was 2 days prior. We show the exponential moving average here in pink, and it's not easy to tell, but yes, this is lower than it was 2 days before. And the fourth thing that has to happen is the market has to close at least 1% below its 21-day exponential moving average. This envelope, which we show with this black dotted line, brackets the 21-day exponential moving average by 1%. 1% above, 1% below. Notice how we closed just above that 1% envelope. In order for the NASDAQ to go to a don't buy signal, we would have to close below that envelope, 1% below the 21-day exponential moving average. Just a note, in order for the market to go from a don't buy signal to a sell signal, we would have to close below the 200-day moving average. Okay, let's see what the S&P 500 is up to. Yesterday, the S&P was down 3.74 points, or 0.18%, less than the 2% threshold for a distribution day. We'll talk a little bit about that later. We closed at 2075. Notice how the S&P tested support at its 50-day moving average and appears to have held that. Trading volume yesterday was heavier than the prior day, and the S&P 500 was down. Typically that would be a distribution day, except we didn't rise, or we didn't fall. by the 0.2% necessary for a distribution day, so we just avoided a distribution day yesterday. The S&P is in an uptrend under pressure, and it has been since February. We are showing 3 distribution days in the past month on the S&P 500. That's not a lot of distribution, and these 2 days are aging. These 2 days will come off of our distribution count at the end of this week and the beginning of next. So we don't have a lot of distribution, and I don't see a great deal of concern in this market unless we undercut this 1% envelope around our 21-day exponential moving average, which would change our market timing model on the S&P 500 to a don't buy signal. But for now, we seem to be holding support at the 50-day moving average. The S&P 500 right now appears to be bracketed by support down here in the 2044 area and resistance up here in the 2116 range. We also have been struggling with psychological resistance at the 2100 level. That's about all I have for today. If you want to talk about any of the stocks mentioned today or any of our market strategies, please feel free to give me a call, drop me an email, or make an appointment. Come by the office, see what we're up to. Contact information is on the home page. Please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohanneson Liqueurs Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohanneson Liqueurs Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohanneson Liqueurs, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohanneson Liqueurs Incorporated believes to be accurate. Ohanneson Liqueurs Incorporated makes no representation that such analysis or calculations are accurate or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources, except where otherwise noted, and data we believe to be reliable. Ohanneson Liqueurs, Inc., its affiliates and subsidiaries, and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push Button Stock Trading is dedicated to the education of friends, clients, and paid subscribers. Push Button Stock Trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push Button Stock Trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of Push Button Stock Trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of Push Button Stock Trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.